To your point about valuations, do you mean sort of people are realizing these inflated valuations are not healthy? Or what do you mean by like, oh, it'll be a standout company, so we should give it a standout company valuation?
Well, I don't want to bring us back to SaaS multiples, but I will.
But I will.
No, I think the like when as an industry tech labels a company a unicorn or a decacorn or like what is happening is one individual private investor is saying, I'm willing to make a bet on this company at this price.
Yeah.
Right? That doesn't guarantee anything about the company's durability or importance or business model.
Yeah, it doesn't necessarily mean anything either.
Right. It's just like, I'm saying that I'm willing to take a career bet on it as an individual investor.
Yeah.
And so I think people are just recognizing that that's not necessarily a guarantee. And at some point you have to reckon with like being a great durable company, like profitability or raising more money or the public markets, or what acquirers think about multiples, for example. And so I think that's healthy for the industry. I'm not predicting that, causes a general turnaround, but like the sentiment I've seen change is not like any less Series B, Series A interest. It's more, do we really want to what does assigning this huge price at the growth stage mean for a company?
But going back to your point about multiples, companies that will be breakout companies, I think you said, can engender a higher multiple because you think they're going to be a much stronger eventual result, whereas more quality but not going to be slack companies would get a smaller multiple because it's a more conservative bet because you're not as expecting that it's going to do as well. And so it would change the math. That makes perfect sense.
Yeah, I think like if investors were like smart and making a bunch of great decisions about how to choose, that would be exactly what would happen, right? But I actually think that's, there's been a lot of pricing of every company like it's going to be Zoom or Salesforce or Workday.
Do you think that was just the competitive dynamics of the late stage kind of growth stage market, or do you think that was optimism gone awry on behalf of the VCs and they were just, too rosy tinted in how they viewed the late stage market itself?
So earlier this year, I gave a presentation to our LPs that said two things can be true at once. We think there's more opportunity than ever before in terms of like how good of a business model subscription software is and how big these companies can get and how capital efficient they can grow. But the other thing that can be true is that there's an awful lot more capital than there's been in certainly the last 7 years I've been at venture. Right. So I think both things are true. And one of the challenges is just like you're in great shape if you choose the great companies and not if you price everything like it's Zoom on the Series E.